Okay, be honest with me. How many of you have been here? Your thumb is hovering over the buy button. Your heart is doing this weird thumpy thing against your ribs. You've been watching a chart. Maybe it's a stock, a crypto, some new NFT project, and it just goes vertical. 50%, 70%, 100%. And you're just sitting there on the sidelines. And then your feed explodes. I told you so. More gains to come. Hashtag to the moon. Your buddy texts you a screenshot of his life-changing profit, and that voice in your head starts screaming, "Get in now or you'll miss it forever." That feeling, that pit in your stomach, that tightness in your chest, that isn't strategy. That's not analysis. That is pure, uncut FOMO, the fear of missing out. And let me tell you, it has cost more people more money than any bad market dip ever has. In the next 30 minutes, we're not just going to talk about it, we're going to perform surgery on it. We're going to rewire your brain to trade with logic, not emotion. Let's get into it. So, what is actually happening in your head when FOMO hits? I want you to understand this because it's crucial. It's not a character flaw. It's a biological hijacking. You're being played by your own DNA. The amygdala hijack. See, when you spot that chart pumping, a little part of your brain called the amygdala, it's your ancient threat detection system. It doesn't see a chance to make money. It perceives a threat. The threat of being left behind, of being the only one not eating when the tribe is feasting. It triggers a primal fight-or-flight response. Adrenaline and cortisol flood your system. Your heart hammers. And the part of your brain you need the most, your prefrontal cortex, responsible for logic, reason, and long-term planning, it just checks out. It gets overwhelmed. You are biologically dumber when FOMO hits. And our modern world pours gasoline on this fire. Social media feeds, man, they are engineered for this. Every like, every retweet, every rocket emoji is a tiny hit of dopamine, the I did good pleasure chemical. A pumping chart surrounded by celebratory posts, that's a dopamine superdose. You're not chasing profit anymore, you're chasing another hit. You're an addict looking for a fix. And finally, we are hardwired to follow the herd. For our ancestors, being separated from the group meant certain death. In the markets, buying what everyone else is buying feels safe, even when it's objectively, mathematically reckless. So hear me on this. You are not weak. You are human. But the trading arena is one of the few places where your deepest human instincts are your greatest enemy. The first step to winning is understanding that the game is rigged against your own biology. All right, so FOMO doesn't just appear out of the ether. It has a playbook. It runs the same plays over and over. Let's break down its greatest hits so you can spot them a mile away. Trigger 1, the parabolic pump. This is the classic one. A coin or stock goes straight up, right angles on the chart. It's the most obvious one. The key thing to sear into your mind is that by the time it's on your radar, on your Twitter feed, on CNBC, the early movers are already taking profits. You are not early. You're providing them with exit liquidity. You're the one buying the top. Trigger 2, the influencer hype. This one's sneaky. A major crypto or stock influencer with 1 million followers posts, "This is going to be huge." Hashtag not financial advice. Guys, remember, their business model is engagement and selling courses, not your financial success. Many times, they got in early and are creating the demand for them to sell into. It's a modern-day pump and dump. Trigger 3, the fear of being wrong. You had a coin on your watch list for a week. You did the research, but you hesitated, didn't pull the trigger. And now, it's up 200%. Your ego can't handle it. You jump in, not to make money, but to prove to yourself that you were right all along, just late. This one is insidious because it's about ego, not investment. And trigger 4, the last chance narrative. This is the last time Bitcoin will be under 60K. Final call before takeoff. This creates artificial, manufactured urgency designed to bypass your logical brain. It's a sales tactic, and it works every time. So, how do you build your anti-FOMO system? Knowing the triggers isn't enough. You can't just will yourself to be calm. You need a system, a pre-written set of rules that your logical, calm, present-day self designs right now so your panicked, future self has a script to follow. The 24-hour rule. This is your number one weapon. I want you to make it a non-negotiable, ironclad rule. You never, ever buy a new asset within 24 hours of adding it to your watch list. Period. Full stop. This forces a mandatory cooling-off period. It lets the amygdala hijack end and lets your prefrontal cortex come back online. The trade will almost always still be there tomorrow. And if it's not, good. You avoided a grenade. Create an investment thesis, not a wish list. Before you buy anything, you must physically write down your reasons. I am buying company X because their new product addresses Y market, their PE ratio is Z, and my target price is A with a stop loss at B. If the only thing on that page is because it's going up, you are FOMOing. Throw the thesis away and walk away. Curate your feed meticulously. This is a big one. Unfollow influencers who only post gains and hype. I mean it. Mute those alpha channels that are just a constant stream of panic and opportunity. Actively seek out and follow educators, fundamental analysts, and people who break down technology and balance sheets. Your digital environment is your mental diet. Stop eating junk food. Embrace the power of no. The most successful investors in the world, the Buffetts, the Lynches, they are defined not by the trades they make, by the thousands of trades they don't make. It is okay to miss out. I'll say it again. It is okay to miss out. There will be another opportunity next week, next month, next year. The goal is not to catch every single wave. It's to avoid wiping out on the bad ones and catch a few really good ones with size. Practice paper trading. If you're new to this, for the love of mercy, use a paper trading account. Make your emotional FOMO-driven trades with fake money. Do it. I want you to feel that urge and execute it with monopoly money. Watch those trades crash and burn. It is the cheapest, most valuable lesson you will ever get. It inoculates you. Look, you're going to make this mistake. I've done it. Everyone in this game has done it. The real test isn't avoiding the mistake, it's how you handle it afterwards. Don't double down. The absolute worst thing you can do is average down on a bad FOMO trade without a new logical thesis. You're just throwing good money after bad, trying to prove a point to the market. The market does not care. Cut losses early. If your original thesis was wrong, and it was because it was based on price hype, have the discipline to sell. Taking a small 10% loss is a tuition fee for a lesson learned. Holding an 80% bag in the desperate hope it might come back one day is a prison of your own making. It ties up your capital and your mental energy. Conduct a post-mortem. This is how you get better. Open a notebook. Write down what happened. On this date, I FOMO bought XYZ at $100. The trigger was seeing it pump on Twitter. I felt anxious and jealous. I sold a week later at $70. This isn't self-flagellation. It's data collection. It turns a failure into a cornerstone of your new system. FOMO is a fire. It can burn down your portfolio, or you can learn to contain it, control it, and use its heat to forge a discipline of iron. Mastering your psychology is the single greatest edge you can have in this market. It's literally what separates the consistent winners from the desperate gamblers. But let's be real. Discipline is useless without a strategy. Now that you've learned to control your mind, what's the actual plan for building wealth? In our next lecture, we're breaking down the single most powerful, time-tested, and emotionally neutral strategy ever created: dollar-cost averaging, the boring but brilliant strategy that beats the experts. It is the ultimate antidote to FOMO. If you're ready to stop gambling and start actually investing, you will not want to miss it. Hit that like and subscribe if you got value. It really helps us out. Thanks for watching. See you in the next one.
Disclaimer. This is for educational and entertainment purposes only. It is not financial advice. Please do your own research and consult a licensed professional before making any investment decisions.